Welcome to Play, the Food and Drink Business Monthly News Review. I'm Kim Berry. This month we have a new sponsor on board. Welcome to LG Equipments, delivering energy-efficient compressed air solutions supported by global engineering expertise and strong local service in Australia. LG is helping the food and beverage industry enhance productivity and reliability, as well as long-term operational efficiency. April was a big month, a global deal that reshaped the flavour industry, a significant structural shift at Australia's national science body, and some frustrating news for the food relief sector. Let's get into it. The biggest story of the month was McCormick's acquisition of Unilever's food division in a deal valued at $65 billion. It's the second largest food deal in history. Knorr, Hellmann's, Mail, Frank's Red Hot Sauce and the rest of Unilever's foods portfolio will sit under McCormick's roof. The combined business will generate revenues of around $29 billion a year. For Unilever, it marks a decisive exit from food manufacturing after more than 160 years in the sector. The company has now divested both its ice cream and food businesses and will emerge as a pure-play household and personal care company. The deal also reflects a broader shift that we're seeing globally, with big players doubling down on high-margin brand-led categories and offloading the rest. Locally, it confirms that scale, brand power and portfolio focus are critical competitive levers, if that was not already well established. Australia's National Science Agency, CSIRO, is stepping away from food science research, and a just released Senate inquiry findings report suggests that the timing couldn't be more critical. CSIRO confirmed that it will exit key areas including food manufacturing and ingredient innovation, shifting its focus towards what it says are broader sustainability priorities. But the Senate Economics References Committee report has warned that Australia's research capacity is already under strain, citing declining real funding, workforce losses, and what it calls an erosion of sovereign capability. The inquiry also highlighted growing uncertainty across the CSIRO workforce, with concerns job cuts and funding pressures are undermining long-term research capabilities and industry support. For food and beverage manufacturers, the overlap is hard to ignore. At the same time as the industry is being asked to innovate, improve productivity and build more resilient supply chains, public good food R&D capability is being scaled back. The question now is whether industry, universities or private capital will step in, or whether a critical part of Australia's food innovation pipeline is simply lost. Treasury Wine Estates is overhauling its operating structure, moving to 4 geographic divisions that will come into play in October. The shift comes with a trading update that shows Penfolds depletions were up 40% in China over the Chinese New Year and 11% in ANZ in the third quarter. The US business was also recovering with total market depletions up 9% in Q3, a significant turnaround for TWE from the first half. It's targeting $100 million per annum in cost savings from the restructure, and with a full realisation over about 2 to 3 years. A2 Milk has reached an in-principle agreement of $62 million to resolve a shareholder class action tied to its FY21 earnings guidance. Just a quick diversion away from A2 Milk, but just onto FY21. What a time. What a time. That was peak COVID. Do we remember that? Yeah, it actually seems like a simpler time. I don't understand either. Anyway, back to the news. A2 Milk is resolving its shareholder class action that's tied to its FY21 earnings guidance. It was a period of pandemic disruption, particularly for A2 Milk, the collapse of the Daiju reseller network into China. It triggered a sharp guidance downgrade and a significant share price fall. A2 Milk says the settlement will be fully covered by insurance and will not affect the FY26 earnings. No admission of liability has been made. It still requires court approval, but it does remove a significant overhang for the company. On a frustrating note for the sector, the federal government has confirmed it will not proceed with the food donations tax offset bill, saying the legislation contains deficiencies that compromise its policy intent. The bill was introduced by West Australian Senator Dean Smith, and it would have shifted the economics of food donation by making it more financially attractive for businesses to donate surplus food rather than dump it. Currently, companies get the same tax outcome either way. The government has instead pointed to $20 million in grants that it's given across Foodbank, OzHarvest, Second Bite and Good 360 over 5 years as the solution. The food relief sector has been pursuing this reform for more than a decade. With the bill now formally closed, how Australia gets to its 2030 food waste reduction target without structural tax reform remains an open question. And finally, some happier news. The 2026 Hive Awards finalists have been announced. There are more than 45 companies and individuals that have made the cut, and they're covering categories from new product development through packaging, technology, business excellence, you name it. Winners are going to be revealed at the Hive Awards Long Lunch in Sydney on the 21st of May. We really do hope to see you there. You can come along, whether you're a finalist or not. The food is amazing, and also the company, shining. All the finalist details, how to book your table or your tickets for the lunch, and also all of these stories and more on the website, foodanddrinkbusiness.com.au. Thanks to LG for its support and coming on board. I'm Kim Berry, and that is your April review. See you next month.